Hello and welcome to Nirmal Bank, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. Swaroop Mohanty, CEO at Mirai Asset Investment Managers India, joining in. Welcome to the show, Swaroop, and a pleasure, as always, to speak to you. But firstly, let me congratulate you as well, because the last I heard was that the AUM has crossed the 1 lakh crore mark as well. So that's something which is a real achievement as well.
Thank you so much, Hiral. Thank you for having me. Always a pleasure to talk to you. Yes, thank you for your kind words. It's been a journey, 14 years in India, and I think, 1 year at a time. So yes, this year has been a good one for us.
Absolutely. So overall, have you seen a change in pattern of investments, Farooq, with regards to how the mutual fund industry has been in the last 18 to 24 months? Because there were a lot of different trends that were emerging on the back of COVID. We saw a lot of changes in trends as well. So what has been, what are those few things which have actually remained the same in spite of COVID being there for the industry?
So I think I've always maintained that this is a permanent juncture in our lives, and it will go down as before COVID and after COVID. And I've always maintained that COVID is that spark that you needed for financial investing to take off and financial planning as such to take off, because all of us are shut at home and we've been more catering to our needs part of our lives and not been able to do justice to the wants part of our life. And yet life is going along quite fine. So everybody has had this great chance of relooking their financial statements and have found enough surpluses to come back and invest. And that's how it has happened. If you look at the industry, it's probably at an all-time high when it comes to investor flow. And the folio generation is peaking every day as we speak. And then this has got nothing to do with any boundaries. We've seen digitization taking this penetration of the country into a different level. And hopefully in the next 5-10 years, we will see the increase in mutual fund investors. And then having said that, the change that has happened in the last 2-3 years has been pretty interesting to watch. Industry now is more than 50% owned by individual investors. Finally, mutual fund is for individual investors, and we're seeing that happening. As we saw the markets go into its own volatile period, we saw the SIP investors standing very firm in the market, in fact, increasing the tally month on month. And today, DII is a very serious buyer in the market, thanks to the 11,000 odd crore book that the industry has. So, while I can say that the same investor is not behaving in that systematic manner when it comes to lump sum purchase, but we've seen a great change in the attitude towards long-term equity buying through the SIP route, which is one of the biggest sort of ticks during the COVID time. Yeah, the debt side could see a little more, adherence to the funds in particular. A long sort of debt investing is yet to take off in India. And I hope and pray that in the next 5-6 years, we'll see that happening. I am yet not able to see that happening as such. People are very market focused. People sway very randomly due to any change in the debt market. And they should stick to the investment horizon of the respective funds like they do on the equity side.
Right. And interestingly, as you mentioned about SIPs as well, yes, the number of SIPs on a monthly basis in absolute terms has been increasing. However, there has been a dip in terms of the average ticket size. But does that actually give us an indication that new investors coming into the market is something which is increasing, and hence the ticket size is dropping? And that's something which is really encouraging as well, though, as a data point.
Yeah, as in when we see new investors coming, they don't allocate to the maximum level when they start off, and this could be a factor. But the overall book is growing, the number of investors are growing, and that's what should matter. Eventually, if they have a good investment experience, the allocation will come. I'm not bothered about that. What should be our endeavor through all our communication is to ensure that they have a good investment experience as they come into the markets.
Right. And overall, if you see in terms of the data as well, as you mentioned, there is still a lot of focus coming in terms of equity. Debt is something which is still taking time to really catch up. So overall, what are the kind of funds that you think are of interest right now?
So I think on the equity side, the interest is very large, and rightfully so, because we are in a low interest rate regime. So the investor is looking for that slightly higher return. So we've had a great inflow into the hybrid category, and something called the Balanced Advantage Fund has really taken advantage of this entire graduation and risk process. But when you look at asset allocation is not as per markets. Asset allocation as per needs of the investor. And here's the question mark I always leave behind. While the same investor is able to judge for himself or herself the risk associated with various categories on the equity side, on the debt side, he or she is not yet graduating to leaving it to the fund manager to decide and ride the volatility of the bond market. Case in point right now, because suddenly in the next 5-6 months, you will see investors flocking to the shorter end of the market and completely dumping the long end. While at these interest rates or the spike in interest rates gives a very good opportunity for investors to come in at the longer end and lock into such fantastic yields. But I suspect it will not happen. There will be risk averseness on that, and people will invest more on the shorter end than on the long end, something which they have stopped doing on the equity side.
Right. And overall, are you seeing any particular trend emerging, Swaroop, in terms of the sectoral front, or if you see from a multi-cap, large cap, or a small cap kind of fund, any trends emerging there?
See, Iral, when compared to the way investors outside India invest, Indians are still very traditional in their investing. We still stick to the large cap, mid cap, small cap when it comes to allocation. We have not yet graduated to thematic investing or taken largely to thematic investing, while the globe is into, specific parts of thematic, which are big ideas for the future. But yeah, in the last 1 or 2 years, we've seen global investing growing, which you can at this moment qualify as a sort of theme. While it should be a theme, it is part of the core portfolio. But we are seeing some changes, at least from our end. We'd given a very good call of healthcare 4 years ago, which played out. And now if we give a banking call, we're seeing money on the banking side. We have both the active fund as well as the passive fund on the banking side. And both are getting money every day as we speak. So there is some amount of graduation, but I suspect bulk of the money will remain traditional for some time now. But yes, there has been a change in a shift towards the passive side of the business, which will be exciting to watch in the next 4 or 5 years.
Right. And overall, what's your views, Swaroop, in terms of where markets are concerned?
Markets, I think two things. One is when you go to the markets pre-COVID, India had seen a kind of a slowdown already. And I think the COVID has been a very beautiful interjection into the Indian economy, because post-COVID, we view India getting stronger when it comes to our comparison to the globe. We are definitely in a far stronger space when it comes to post-COVID impact, and the demography of India is there for everybody to see. And in the next 5-10 years, I don't see any reason why India cannot dominate, and add to the fact that we've added the manufacturing thrust to the country. So if we are able to implement that well, this country can change perpetually. And hence, we are pretty comfortable in the market. At the end of the day, a portfolio is formed out of 50-60 stocks. And we've always believed and demonstrated in our 14-year of track record that we have the ability to give you 50-60 good stories. And right now, there's enough value in the market on the broad market side, because there has been a bit of polarization due to COVID, and it's a good time for stock picking, is our view.
Right. And overall, post the budget announcements as well, how do you look at the valuation on the Indian market front?
See, I think we had expected or we had thought that it should be a growth-oriented budget, and that's what has come on the table. The key will be in the implementation of the budget. We already highlighted the fact that the money should be spent evenly across the year, and if it's not, then you delay the impact of this budget. That's something which we'll watch very carefully. But at this moment, it's been a very business-oriented budget, something which typically does not come when elections are around the corner, and that's a tick which we give to the budget. So a lot of benefits from it. Yes, it could rise in a little bit of inflationary atmosphere, which is reflected on the bond market. But inflation is part of the world now, and you cannot take that away from it, irrespective of the budget. I mean, look at the inflation of US. I mean, they're grappling with it, and the ripple of that would anyway come to India. But we firmly believe that the central bank will come and address that, and hence the numbers put on the table on the budget are pretty realistic. And as it goes about doing its job, we will see the positive impact on the market. And hence, if at the end of the day, if you look at the prior to budget sort of run up, these were more services oriented, and then you add to it the manufacturing push that this budget is getting, the results can be pretty commendable, because when the government starts putting capex on the table, it then gives rise to private capex, and together the market becomes a far stronger place to be in. So we are pretty comfortable with it, and we do look forward to the next 2-3 years of India as a a process of strength from a year-to-year perspective.
Right. And overall, what's the sense that you have, especially on the virtual asset side of it? Because yes, it is a big announcement. How do you see it, actually shaping up? And do you think any role that blockchain, virtual assets would actually play in the mutual fund industry?
See, there was a regime of fixed assets, then came the regime of financial assets, and this budget recognizes or begins to recognize digital assets. How it will play out, only time will tell. But I mean, there is this firm belief that if there is money flow anywhere, it should be regulated, and there should be a framework around it. Probably this is step one, and if there is no regulation around money flow, more often than not, money behaves in a very different manner. So will be interesting to watch. I mean, the young definitely take to the digital assets very differently to people our age. So it'll be up to them as to how they shape it, and I'm nobody to comment whether it's right or wrong, because frankly, I don't understand most of it. If I don't understand, then I don't invest in it. But the looks of it, there is a definite market there, and there's a fair amount of fan following for that market. Whether it's due to the growth in the money or the kind of wealth people have amassed for that, or whether there is an actual structure on that, is something which they have to now demonstrate. If there is a recognition of that, it's up to that industry to put things in order and bring out the entire essence of that asset in the truest sense. But what will happen going forward will be definitely interesting. India is a very young country, and the young have started earning money too. So whether they go there or they come to mutual funds will be interesting. But whichever part of it gets regulated, that is the part with the mutual funds will get into. I suspect it will be blockchain before we get into crypto, and that's we also, if it gets interesting, then we will also file and be that part of the business through the passive route. But again, I repeat, whichever part becomes regulated, that's where the mutual fund industry will play.
Right. And overall, from a growth perspective as well, as you mentioned, yes, the anticipation was that it will be a growth-oriented budget. Now, the key aspect is going to be with regards to how the execution happens. With all of this, how do you think will the government tackle inflation? Because that has been a worry across economies right now. We are seeing how they're squeezing out liquidity from the system as well. What's the next step? Are you expecting the Indian government, the RBI, to take as well on the liquidity front, on how they will start cutting rates? What's your anticipation on that front?
Actually, the RBI, as all of us know, has been on a very accommodative stand, not just our central bank, the global central bank, due to a very serious underlying reason, and that reason still remains. We are not seeing the end of the light for COVID yet. And I suspect for some amount of it, the central bank will continue playing a balancing act. But as and when the inflation starts growing, which it can, couple that with the unemployment data, which is also playing out, you cannot take away the broad impact of COVID on our country, for that matter, any country. And I was a little disappointed that no mention of COVID was made in this budget, or no provision was made for this sort of impact that is about to unfold. So that's a place which will be very interesting to watch. Yes, if there has been a star in this COVID period, it has been our central bank. So I'll put my money on the central bank to come back and tackle the situation well. But some of it could be outside the control, and that's the nature of the impact or the kind of effect that the COVID will leave on. When you shut a country for 2 years, the effect has to be there, and the effect has to be jointly sort of, what can I say, all of us should, contribute to sharing that impact, whether us in the form of paying our taxes on time, or the government playing its role at the right point of time. So it should be a collective sort of responsibility of every citizen in India, along with the government of India, to see this one through, because the impact obviously will be large when the numbers do come out.
Right. Absolutely. And Swaroop, my very last question is that Mirae Asset Mutual Fund is planning to offer its global ETF products to Indian investors. What would this actually mean to Indian investors, and what would the benefits be of this product?
See, finally, when you look at investing, and investing is actually pure numbers, it is very unemotional. So wherever there is value, people should invest. Earlier, investing globally was not as easy as it is now. The passive route offers some fantastic opportunities for Indian investors. We've had 3 funds with our own ETFs, but now, as you know, there has been a stoppage of those funds because of the 7 billion limit that the RBI had put has been hit. So the way forward could be opening of this limit, or you go out and invest in global ETFs. You would have recently read that we intend to get some of our global ETFs into India. Global X, which is one of our sister concerns or one of our group companies in the US, is a very well established ETF franchise, and we intend to bring some of their funds into India through the ETF route. When Indian investors look at investing, they should always know, and I'm not taking anything away from the Indian growth story. Irrespective of that growth story, India is still 3% of the global market from a market cap perspective. 97% of the markets lie outside India. And if there are some good stories which have good wealth creation potential, which are offered to Indian investors, there's no reason why they should not invest. But they've shown that investing pattern in the last 2 years, and I believe that it's here to stay.
Absolutely. So that's the story that we should be watching out for as well. Thank you, Swaroop, so much for joining us on the show. As always, it's a pleasure to speak to you, get insights from you, and congratulations once again as well. Onwards and upwards to continue for Mirae as well. Thank you. Stay safe. Speak to you soon again.
Thank you so much, Nirmal. Thank you so much.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.